Hey, hi friends. So this video I'm going to do on India Mart. So last week I had some free capital, so I can take one more position. So I was searching for this, and this position, India Mart, is in my list for quite some time. I was just waiting for it to confirm the breakout. We'll go through the usual, process of checking if the consolidation is complete or not. So the initial objective of consolidation was to test this level. Okay. So if you put a line here, and subsequently market has tried to test it here once, second time here, third time here, and fourth time here. So now this level, right, around 4670, this is kind of a solid support or a demand area. So if you see, right, here, this, and this, so this is slightly on a higher level. Okay. So actually, why I was not taking this trade, right? I was not thinking about the trade. This particular script is, there are many reasons for this, but I'll show you one. Okay. So the first serious attempt was this. Okay, here with this high volume candle. Okay, and this is a pivot. So if you see that, right, entire range, the pivot has not been crossed. So there was one more chance here, but so the pivot moved here, then the pivot moved here. Okay, finally, and this is a candle where actually the breakout has happened, and followed by a test next day. Again, bit of a test, and now it has kind of small gapped up. Okay, there is a window, a different type of window, but there is a gap actually here. So I think this is now ready and can move. But if I just look at the quality of the consolidation, right, so I need to see that uh, I need to see that higher test. Okay, like this. So those are so that's the only concern that I have with this. Okay, so if I look at here, right, this was the first test. This is a higher, but this is slightly lower. Again, this is higher, but you see here they have formed a good base here, and then again they have tested it here. So that's why I'm thinking that this is now ready. And if I have to buy, right, I would possibly go ahead and buy at high of this candle. Okay, which is at 5400, and the stop would be here, 4999. Okay, so percentage wise, if I look at, right, percentage wise, that would be around 8.5 or 9%. So usually that is what is normal my stop. And expectation wise, right, so we have this trailing stop loss. Okay, so I'm expecting that trailing stop loss for this position will not be hit, or even if it is hit, right, it will be only for a couple of days, and then it will come out again, and will provide a opportunity to re-enter. And the expectation is like market will consolidate a bit here, and then it will start going up, and then again consolidate here, and then probably go up. So in all, if I see, right, this looks like a 60 days trade. Okay, if the stop loss is not hit. So if I have to show you the stop loss, right, so this is a stop loss that I use. Okay, so usually, so this is where the stop loss was hit. So after this right position come, we enter. I'm expecting that this stop loss will not be hit, and we will remain in the position for 90 days. Okay, so there are many other stocks here which are also ready to buy, but this one slightly I feel better, because the consolidation that has happened, right, starting from this to this is almost now, actually the consolidation was complete here. Okay, around 42 days, right? So this low volume bar here, so consolidation always ends with the lowest volume in the range. Okay, so if you see here, right, this bar here, this is the lowest volume. this. So I'll just draw this. Okay, this is the lowest volume, and since then there have been one another day where there has been the lowest volume, but that is not on the lower side, but that is on the upper side. So this is probably the range that needs to be broken, and this was broken in this candle and followed by a confirmation here, and now it is ready to move up. So that's why I think this is a good bet. So let's look at risk calculator. Okay, so we go to our normal risk calculator. I can take only one position, okay, at this point. I maximum that I'm going to risk is 1.5% on this trade. The price of the share currently is 5440, okay, and the stop loss is 8.5%, which is 4977, okay, 4977, and value at price, right, is 88,000, and value at loss is 80,000. So I'm about to risk 7,500 on this trade, okay. So this is likely to be a 60 days trade. So I'll just maybe compared to the other trades, right? There are other trades like this one, right? Asai. This is also a good one, okay. So if I just hide my indicator and tell you, see, right, this is also appearing very good. uh, the only problem that I have is, right, between these, right, pivots that are created here, right, there is actually the consolidation is kind of complete here, okay, and this is again new pivot here created here. So I'm expecting the price to go here in this range, stay here and test this area to confirm, and then move up. So probably if I have to take a position 2-3 days later, right, I will prefer this over India Mart. But if I say that I have to take a position on Monday, right, then see, this consolidation complete, this test complete, right. So this is kind of a ready, even if it consolidate, right, it will consolidate here in this range for few days and then it will start going up. So both are equally good actually. There's hardly any difference between these two. Another way of doing it is that I can maybe split the position as well. But usually I don't do that splitting of the position. So I have kind of like felt that this is slightly better, because the break is clear, and plus the indicator is also showing that there is a clear buying, okay, here. So it looks like we can still go with India Mart, okay. So thanks guys for watching.